Genesis Global Capital files Chapter 11 bankruptcy. Cameron Winklevoss threatens to sue Barry Silbert. Nexo agrees to pay $45 million in fines. That and more on the CoinSense Crypto Wire, your regular update of news and events regarding Bitcoin, Ethereum, the other digital assets, and the greater global geopolitical scene at large. Today is January 20th, 2023. Genesis Global Holdco, LLC, the parent company of troubled cryptocurrency lender Genesis Global Capital, filed a voluntary petition for Chapter 11 bankruptcy protection. The petition estimates Genesis Global has over 100,000 creditors and liabilities between $1 billion and $10 billion. The company owes over $3.5 billion to its top 50 creditors, including crypto exchange Gemini, trading giant Cumberland, Mariana, Moon Alpha Finance, and VanEck New Finance Income Fund. Gemini CEO Cameron Winklevoss has threatened legal action against Digital Currency Group, which is the parent company of Genesis, and Digital Currency Group CEO Barry Silbert over the repayment of a $900 million loan. Winklevoss alleges that Silbert mixed funds between the companies he manages and failed to cooperate with Gemini to draft a plan for the loan's repayment. The MakerDAO community voted in favor of keeping the Gemini USD stablecoin as part of the protocol's DAI stablecoin reserves amid concerns about insolvency. This was in response to a liquidity crisis plaguing Gemini's Earn program, which led to concerns about MakerDAO's exposure to the platform. MakerDAO will continue to hold 85% of all Gemini USD in circulation. However, there are still concerns about Gemini USD's value, as it is partly backed by cash held at Silvergate Capital, which has been affected by crypto-related meltdowns. Crypto lender Nexo has agreed to pay $45 million in fines to regulators due to regulatory violations and will cease offering and selling the Earn Interest product to United States investors, according to a recent statement by the United States Securities and Exchange Commission. The fine is not related to fraud or illicit business activities, but is due to the failure to register its Earn Interest product with regulators. And Nexo's co-founder stated that the payment would be spread out over the next year. John Ray III, the acting CEO of the now-defunct crypto exchange FTX, has announced that he is exploring the possibility of relaunching it following the disclosure that FTX debtors and bankruptcy administrators located $5.5 billion in liquid assets. FTX's native token FTT has increased by 37% following the news. However, there is a lack of trust in the exchange, which may limit the chances of it thriving again. The Bitcoin hash rate is trending near all-time highs according to on-chain data as of January 20th, 2023. Improvements in efficiency and rising prices may be contributing to the current rise in hash rate, and it may continue to rise if BTC prices maintain their current trajectory. Police in India have uncovered a significant cryptocurrency investment scam that have led to losses of approximately $40 million for investors. The scam promised high returns on investments in a crypto called GDC, but instead caused investors to suffer major losses. Gavin Wood, Polkadot's creator, announced that after 15 months of development, Polkadot XCM version 3 has been released, which aims to enhance interoperability across chains, smart contracts, and NFTs. The team at SushiSwap has presented a new roadmap with the goal of regaining momentum. They plan to enhance their ecosystem by integrating support for independent collections of non-fungible tokens, or NFTs, and launching its aggregator routers. These new features aim to improve the user experience and increase the user base on the decentralized exchange. The team is confident that these initiatives will position SushiSwap as a leading option on the decentralized exchange market. You've just listened to the CoinSense Crypto Wire for January 20th, 2023, brought to you by CoinSense.com, a free-to-use sentiment analysis website offering unique insights into the cryptocurrency markets.